Hi everyone, welcome back. Today's lesson will be lesson 4 and 5, and it's July 8th. At any time, I wanted to show you this actually because I think I have forgotten to mention it in previous videos. I did go through it in the orientation, but just as a nice reminder, this is the very first post in the series of announcements here that I post every day. And I love using this because it's a good schedule of what lessons are to come or what lessons have already been happened. So you can click on any of them and it'll take you to the right lesson and the right discussions or assignments associated with those lessons. So we are here July 8th and we have two lessons today. Lesson 4, which is Canadian banking, and lesson 5, which is investing. It's a lot. So I'm going to make two videos. The first one will be going through the Canadian banking and the second one will be going through investing. So this being the first, I'm going to take you through Canadian banking. So lesson 4 is Canadian banking, and the key idea of the lesson is the Canadian banking system is one of the best in the world because of its regulation and security procedures. The Canadian banking system is unlikely to experience a large-scale collapse like we have seen in other economies. The goals of the lessons are to identify the major financial institutions in Canada, evaluate products and services offered by Canadian financial institutions, identify trends in the Canadian banking industry, and compare personal banking with commercial business banking needs. And you'll see that a lot throughout the course, the comparison between personal and business in general. At the end of this lesson, you will be able to discuss trends in the products and services offered by Canadian financial institutions. So this is a little pre-assessment that usually you see in most of your lessons, and it's every country has different kinds of banks, banking regulations, and banking procedures. In Canada, we have a tiered banking system that is heavily regulated. How much do you know about our banking system in Canada? So it's not a test, it's not a quiz. It's assessing what you already know in the past. Do you know just a little bit? That's cool. Do you know a lot? That's fine too. So again, the same kind of thing, you're going to hover over the plus. It's going to give you a pen to write with. You click and drag anywhere. You guys have all got the hang of this by now. They've been done wonderfully up to this point, and you're going to talk about what you know. Maybe it's a little, maybe you know quite a bit, your own experience with it. Okay. So then they get into types of financial institutions, and there are a lot of financial institutions. Overview. Banks in Canada offer individual customers many different products and services. Some of the products and services are outlined below. Bank accounts. So you may already have one of these yourself, but if you don't, your parents probably will. And bank accounts hold our money. There's two different kinds of bank accounts, and actually there's more about that, but the most common types of bank accounts are checkings and savings accounts. And there are major banks in Canada, which I think we get into a little bit later on in this lesson, and you will learn about that. So bank accounts hold our money. They allow us to take money out of it, either in cash at tellers or at bank machines or via sending interact transfers to each other or buying online, sometimes with the online debit card that allows you to purchase online. Credit. So credit is offered at many different banks. You can get credit to buy a new car. You can get credit to buy a house. You can get credit just to use as credit cards so that you're purchasing stuff with it and you're going to use your credit card so you don't necessarily have to take out like a major loan. So let's say you want to buy groceries for your week and you go to Superstore. You can use your credit card as a form of payment. Okay. Investing plans. Banks cannot invest for individuals. However, they can offer them investments that individuals can choose to purchase. So some people have investments with their banks and it will earn interest for them. So I myself could invest in my bank and my bank will offer me interest. So whatever the plan is, whatever the program is that they have. So instead of me paying interest on something like a loan, it's like me kind of loaning my money to them, telling them, yes, you can use this money and this is the interest that is owed to me back. Okay. Good example of this is GICs, guaranteed investment certificates, or contracts with the bank, whereby the customer lends the bank money for a specific amount of time, and the bank pays the customer his or her money at the end of the term with added interest. So this is kind of like our version of how we loan the bank money. Savings plans. Other than savings accounts, banks can offer other savings plans like RSPs, RESPs, again, to save for our future, for saving retirement, good ways to kind of have some financial stability in the future. And this is what I was talking about just before, where I said you will hear about this a little bit more. Schedule 1 banks. These are banks that are regulated in Canada by the federal government. So the big ones, I call them the big ones, TD, RBC, Scotia, CIBC, BMO, National Laurentian, 19th century. These were all made in the 19th century, all of them. So these banks have been established in Canada for a long time. So those big players, TD, RBC, Scotia, CIBC, etc., those are the ones that have been established themselves in Canadian territory for a very long time. They are the big banks, okay? And that's they take up a huge amount of the Schedule 1 banks, but there's also smaller banks um, and newer banks, I'd like to call them, that have kind of stepped into the recent, I would say, like within the last decade or so of banking. And examples of that are like Canadian Tire Bank, PC Bank, all newer banks. So they are still major players, but they aren't as established as those CIBCs, TDs, etc. Okay. Schedule 2 banks. These banks are also regulated by the government in Canada, but are subsidiaries of foreign banks. Schedule 2 banks are not traded on Canadian stock exchanges and have a small number of foreign private shareholders. These banks are also authorized under Bank Act to accept deposits. The main difference between a Schedule 1 and Schedule 2 bank is the ownership. A Schedule 2 bank is foreignly owned, so it's not owned within Canada. Okay, it's owned outside of Canada, and that's what makes it a Schedule 2 bank. Schedule 1 banks, those big players that I mentioned, and the smaller ones, Canadian owned. Okay, Schedule 3 banks. These banks are also regulated by the government of Canada and are branches of foreign banks. Again, this kind of idea, they get specific permission to operate in Canada. So an big example of this is Bank of America. Okay, you can tell right by the name, Bank of America, probably not Canadian, right? Trust companies are legal entities not operating under the Bank of Canada. These companies can hold property in trust for another entity for the purpose of estates, personal trusts, pensions plans, mutual funds, etc. And sometimes you hear this in a movie or a show, it'll be like, he has a trust fund for when he turns 18. This kind of idea, okay? Credit unions. Credit unions are provincially regulated and are owned by members who typically form the credit union to provide financial services. So this could be like members of a certain ethnic group. It could be members of a certain company. For example, the Toronto Transit Commission in Toronto, they have a credit union aligned that people that are employed with the TTC can actually gain membership in the credit union so that they can establish that. And so they have sometimes special services or discounted rates or whatever that they offer their members to be part of the credit union to make it attractive for them to join. Okay, that's an example of that. And then insurance companies. Insurance companies are private companies that must follow government rules and regulations. There's a lot of rules and regulations around insurance practices. Insurance is a guaranteed compensation for the loss or damage of an entity in exchange for the payment of premiums. So a good example of this is paying car insurance every month. Although it is legal, there are different types of car insurances that are offered by different companies. So you have to have car insurance to drive your car, but the type of car insurance you get can be different depending on the provider of the insurance. So you might hear this a lot, like I got a great, car insurance rate with Geico or whoever it may be, and people shop around a lot, which would be really good with your comparison shopping from a few lessons back, to get the best rate for their driving practices on a day-to-day basis. So another example of insurance is house insurance, business insurance, There's many different forms of insurances, and again, paid monthly, paid a premium. But if something happens, hopefully the product or item is covered. So you have insurance, you pay every month, you're driving every month, you got a good rate, you're doing well, and then somebody hits your brand new truck, your truck will be protected and your insurance will pay for those repairs. And your insurance will help you and support you in ways that maybe even outside of the actual repairs, like maybe you hurt your neck, so you need physiotherapy. They could help you pay for that. Or, you know, kind of this idea that they will help you after the accident has occurred. So insurance protects you and your belongings in the future. Okay. Um, Sometimes people have content insurance, so they insure the contents of their house. So let's say they have a really like sweet painting that they love and it's like worth a lot of money. They will insure that painting to ensure that if the house gets broken into or something of that manner, they will have the value of that painting replaced. Okay. All right. Personal type topic C. So you have to answer this question right here, true or false, and check it. And then we go to topic C, personal versus commercial banking. There are a number of differences between personal banking in Canada and commercial business banking. People are usually focused on investing and saving in order to increase their personal wealth in the hopes of being able to make purchases in the future, retirement spending, or saving for a new car. Business is said to be more focused on expansion in order to make more profit and increase stock price. The idea of a long-term savings is replaced with long-term business growth, and it makes sense. We want to save personally, but businesses want to grow. It's for their future and it's for our future. So personally, we want to be able to establish ourselves to do well in the future. Same kind of thing for businesses. They want to establish themselves to do well in their future and grow. The graphic below explains some of the banking functions that the individual and the business focus on when using bank products and services. And this is a really good infographic actually. And it breaks down the differences and functions between personal and business banking. Okay, and I'll let you read that one for yourself. And then for this lesson, so for lesson 4, there isn't actually an assignment, okay? So there's no assignment for lesson 4, but there is a discussion. So kind of in the same way that we had the discussion where we introduced ourselves in lesson 1, we are going to use the discussion forum to discuss a topic. So you want to click here on the current trends in Canadian banking products and services discussion, and it will bring you to the discussion. And it says research 2 or 3 of the Schedule 1 banks in Canada. And remembering back to what I just talked about, Schedule 1 banks are those big banks like TD, RBC, Scotia, CIBC, BMO, National Laurentian, and I think there's Canada Western too, and also includes Canadian Tire, PC, Simply, okay? And create a post that discusses some of the unique products and services that each bank has to offer, things that other banks do not offer. So a good way to start is literally just visiting these banks' websites. Banks will advertise their products right on their website. So it's going to tell you as a customer, they want your business. They want you to open up a bank account. Why? Because you pay monthly for most of them. Okay. And if you don't pay monthly for most of them, there are some free bank accounts. Okay. I don't want to give away too much, but there are a couple. One of them, I will tell you, you can get some free banking from Simply. You might want to look into that. Okay. For this project. And so they are going to tell you, even if those bank accounts are free, they're going to charge for other services. They're going to charge to create checks for you, okay, to print checks. They're going to charge maybe for Interac transfers, okay? You need to really look into what these banks offer you. Do they have special investments? Do they have programs for first-time home buyers? Do they have, something like start your mortgage with us and we will give you a $250 gift certificate to the Brick? What kind of incentives are they offering for their business? Okay. Then discuss some of the current trends in the Canadian banking industry. What is popular? And explain why you think Canadians are currently using these products and services. So this one you're going to be able to see when you visit the websites and kind of look around the home pages for these banks. Okay. You're going to kind of start to see some of the trends and thinking about what you think is important and what you think is being said, you'll be able to kind of bring something together. Okay. So I can say that, for example, right now, the idea of buying a home with the home prices being so high, because we all know that the value of homes have risen so dramatically within the last, I would say, decade. So, what kind of services are banks offering customers to be able to purchase their homes? Think about that. Look at the trends involved with that. Are they giving bonuses? Are their interest rates really low? Is that what's drawing people in? Okay, so kind of try to figure out what the banks are doing and start off that. When you're done, reply at least to one classmate's postings with creative insight, a personal experience or connection, or a thought provoking question. So you can ask your peer a question about their work or their thoughts, or you could, can make a connection to your own life, or you could tell them that you agree with their thoughts and why, whatever the case may be. But it's only the minimum is one. You can do more than one, okay? And then you just post it by saying start a new thread. Okay. Your subject could be whatever you want. You could just use the title from this. Doesn't matter to me. Or you can name it like your banks that you've researched, the names of your 2 to 3 Schedule One banks. Okay, whatever you may want to name it. You type in your information here and you hit post. Okay, and then to reply, you just reply to the person's post. If you have any questions on this lesson, please let me know. Take care of yourselves. Have a great day.